The market is changing. So what do you do in today's market? How do you succeed as a real estate agent? And then how do you take advantage of a market as an investor? Today, we're talking to Tony Garcia, and this is going to be a great conversation. From an agent to an agent investor. Today in the office, we have Tony Garcia, and we're going to have an interesting conversation, which is from hustling to actually owning properties.
Yep.
So, Tony, welcome.
Hey, thank you, Andrew, for the invite, and I look forward to having a great conversation with you.
So why investing, man? Why aren't you just happy being an agent?
Investing, honestly, like that's the only reason why I became an agent initially, was to become an investor. Well, I actually was already an investor, but I wanted to keep investing. So I felt like a great way for me to quit my 9-to-5 job at the time was to get my real estate license and represent myself on both sides of the transaction on acquisitions and sale. So yeah, really just honestly, investing has always been my priority then.
So take me back. I mean, you're obviously, last name is Garcia. Mm-hmm. Were you born here? Where are you from?
I'm actually from Mexico. I was born and raised in Guanajuato, Mexico, which is centrally located. I moved to the U.S. when I was 16 years old back in 2013. My mom and I moved there. My dad was there in Iowa and finished high school, finished college. And after college, I moved to Rockford, Illinois. So that's what brought me to Illinois.
Okay, so, yeah. Got it. And what was your career after college?
Engineering. I studied robotic engineering and started working in that field right after college. So I was 20 years old when I moved out on my own, and I was doing my first full-time career. So
got it. Yeah. So you're doing robotics, right? Yeah. Engineering. And what lured you into being a real estate agent? Because that's a comfortable job, and you could have progressed in that particular job. Why did you jump into real estate?
So I jumped into real estate really because I wanted to make more money. Obviously, when you're young, you want to make more money.
Sure.
And at that point, the only thing that I knew what I could do to make more money was to go back to school. And I didn't want to go back to school because that meant time and money, debt, right? College loans. So I was like, reading books like Rich Dad, Poor Dad, and they're talking about assets versus liabilities.
Sure.
So that sparked my interest into real estate. And then I got a hold of an agent that to this day, he's still a good friend of mine. And started buying properties after that. So that's really what drove me from, just wanting to pursue more.
Got it. So basically, you get into real estate because you want to make more money, right? Was there somebody who was instrumental in making that happen?
Yeah. My good friend Victor, he was my agent at the time, and he was already investing and stuff, and he was telling me that, buying rentals and stuff. I didn't know much about other stuff other than rentals. So he was really important to how I got started.
So did you grow up in a family where there were a bunch of entrepreneurs, or where did this idea or the seed get sowed in?
Really, no entrepreneurs in our family. We come from farm workers, factory workers. Like, I'm the first entrepreneur in the family. I'm the youngest of 5. So, and I'm the second one in the family to graduate high school, go to college. So, really, I don't know. I ever since I was like younger, when I lived in Mexico, like seeing how hard life was and how much we struggled, right? I always like fathomed the idea of like just making money, right? I'm like, how do I do that, right? So at that time, the only way I knew how to do it was to go to college, right? But then once I went to college, and then I already kind of just started making money, I'm like, well, I want to make more. Like, how can I make more, right? So then I just started doing research, just like, listening in on these audiobooks about entrepreneurship. I'm like, well, how do I start a business? I don't know how to start a business or even what to start a business in. So that's kind of like where I kind of just started getting the idea of like, okay, I want to be an entrepreneur, but how can I do that?
Got it. Okay. So let me ask you this: as there's a lot of Hispanic people, they're not afraid of work.
Yeah.
Right. Most immigrants, whether you're Hispanic or anywhere else in the world, they come to America, and specifically Hispanic people come to America wanting to own a piece of America, but they end up building America, and I mean it literally.
Yeah,
right.
Literally.
I mean, if you look at especially construction industry, anything like that, Hispanic people have the biggest contribution.
They do.
But they don't own a piece of America. Why do you think that is?
I think it's because they're afraid of debt, right? And that's the one mindset my dad always had. Oh, buy everything cash. If you go get a car, instead of leveraging it and getting like a loan on it, just buy cash, right? So they buy everything in cash, to not have any debt because debt is bad. And I feel like they're just afraid to leverage debt. They don't know how to, maybe they don't have the financial education to use it, to leverage it. And that's really what keeps a lot of Hispanic families from investing, from doing something bigger. Because I'll be honest, like I feel like us as Hispanics, I don't know why we're just afraid to become entrepreneurs when that's where you can grow. That's where you can do endless things with it, right? We're just known as the guy that works hard, that's it. But you don't own anything. You're just the guy that works hard 12 hours a day, that's it.
And it's like a lot of times I think sometimes culturally they take pride in hard work, right? And I think that gap is closing, obviously, but a lot of times they don't take pride in ownership.
Yeah.
Right?
Yeah.
That it's great that you work hard, but if you don't own the product that you're working hard on, then where does this go?
Yeah, you're always going to be stuck, like working for the boss when like you have more than enough tools and resources to be able to launch out on your own, start your own business, do whatever it is you can, right? I always ask to this day of my dad that like, hey, why didn't you never start a business? Like, oh, I don't want to. Like, I had stable job, overtime, all this. Like, I'm like, but that's it. Like, no.
I think also it comes because a lot of times when you know what it is like to be poor,
Yeah.
you don't want to take a chance. You're like, hey, man, I got it pretty good.
Yeah, I know.
Let me just, right? I mean, now I can enjoy my weekends. I can buy a nice truck. I can do, like, quote unquote, the nice things, right? When you were back home that you could not do, right?
Yeah.
Now it's like, okay, my standard of living is substantially higher.
Yeah.
Right? So the same question about agents. You become an agent.
Yeah.
And because of Victor, right? Victor is a part of Mastery.
Yeah.
So he came to us pretty young.
Yeah.
And why is it that a lot of real estate agents don't do the same thing? They don't invest. They have the biggest golden ticket, which is they're closest to the deals.
Yeah.
Yet they don't own any. Why do you think that is?
I feel like for one is like I think one is lack of education, right, of the knowledge, and two I feel is the afraid of risk, right? Because I feel that like a lot of them like they see their realtor job as like a job, right? Like kind of in a quote in a way like security, right? But they're afraid to risk their commission checks to invest into something, right? I feel like for one, they don't know anything about rentals, how they should properly do the BRRRR method. Two, like if they think about flipping, right, they probably don't know the people, the contractors, whatever to flip it. And like I said, I think it's just the afraid of risk, right? The afraid of risk to make an investment and start building their own business. Because I told realtors this all the time, right? Because it's crazy, right? Because this is why I like dividing my mind in two. My mind is like, okay, yeah, like I have a scalable business as a realtor and I treat it like a business, right? Because now I have an assistant, I have a showing agent and everything, so I lose leverage to run this business. But my other side of the brain is like, I'm still thinking as an investor, looking for deals for myself, right? Looking at stuff to acquire. And I always tell agents like you should always be trying to invest in real estate if you can. There's so many. Financing is not an issue. You master finding the deals, you can do whatever it is you want with that property.
So, the other day, and I truly believe this, that a good agent helps his clients find great deals, right? They take pride in what they do. But a great agent, for every 5 deals that they sell, they buy one for themselves.
Yeah.
Right. And a lot of times people will take that in the wrong way. They're like, oh, you're saying I'm not a great agent. That's not what I'm saying, guys. Right. What I'm saying is this, that why is it we as agents, I was an agent for a long time, since 19 till very recently, because I don't use the license, I didn't renew it. And that why is it we take pride in helping everybody else, but not our own families?
Yeah. I think it's because like most importantly, like, like you get a pat on the back from the client, photo and all this stuff. Like, oh my God, you helped me buy a house. Like, yeah, that's cool. But like there's so much other ways to like that you can scale yourself up and build yourself up even more. If you're an agent and you're not investing, you're doing it wrong. 100%.
100%. Right? 100%. I don't know of a singular agent, right? And literally, I was an agent since I was 19 years old. I don't know of a single one that has ended up well off if they did not take the money that they have. It doesn't matter how much or how little, and if they did not invest it. I mean, be it real estate, be it stock market, be it something for a long period of time. And real estate, right, is the greatest equalizer. Because if you take care of real estate for the first 5 years, it will take care of you for the rest of your life.
100%.
Right? So you came around us, this was back in 2 years
23.
ago, right?
Yeah, like 2 years ago.
About 2.5 years ago, right? And at that time, you're trying to quit your job,
Yeah.
right? And you did a couple of wholesales.
Yeah, I did a couple
right?
wholesales. Yeah,
Couple
I
scary
remember the
times.
one in Bellwood. I should have kept that one.
Right.
I
Right. No,
regret it.
but it was a difficult property, right?
it
It was a
was.
difficult property, and you're like, oh my God, I'm just stepping in. I don't feel the best about it. But so, can you kind of walk us through that?
Yeah.
That what was the mindset at that time? How did you do a switch from corporate to being an agent? Because let's be honest, being an agent, it looks very glamorous from the outside, but it's work. It's a hustle.
It's work. So what I did was that I sold 2 of my properties in Rockford. I sold my single family house that I lived in it. I bought it with a 5% conventional loan in 2021. So I lived in it for 2 years. So per the tax code law,
Sure.
I sold it, and because I lived in it for 2 years, I was going to pay capital gains.
Yeah.
On the other property I sold, I did pay capital gains. So basically, I had
So you mean on your first one, you were not going to pay capital gains? Yeah,
on
obviously.
the second one, I did.
Sure.
So basically, like what I had saved up and what I racked up from there, I had a great chunk of capital saved up.
Sure.
Which I felt more security. Like, okay, like I have, so my bills are X amount per month, right? I have this much saved up. Worst case scenario, I can go, if I don't sell any houses for a year, I'm good. I have all my bills covered.
You
right?
can go back. And the reason I asked that question, and this is important for everybody watching, listening, that what he did was he had a corporate job. Clearly, when he used that to be able to put some money aside, to be able to buy something, right? It's a little bit delayed gratification. We all want to be entrepreneurs tomorrow, and sometimes it doesn't happen tomorrow.
Rome isn't built in a
right?
day.
Right. So how long did you work in corporate before you started making the transition?
6 years. I worked
6
6
years.
years in corporate. I was 26 when I quit my job. And the reason why I quit, it was literally just, it was actually on the 17th. I actually just, did my 2-year anniversary. I always celebrate. I always
Sure.
go out to dinner. I actually have the email I sent to my boss when I quit. I printed it out, put it on a frame. I look at it every day. So like I literally just quit like that, and I was thinking like, oh, okay, I have this money saved up. I wanted to invest, which is why I got into mastery, because I want to keep investing. But then I'm like, shit. Basically, like the realtor, what I'm doing basically replaced my 9-to-5 job, means I need to get this active income up and running, which at that point I wasn't having the success that I am today.
Sure, of course.
So I decided to put investing on pause to build this business up to at least where I could get traction with clients and stuff and everything, where I don't have to worry about like sales or whatever. Now it's just like, I'm blessed that referrals just come in every day, right? I don't have to worry about that. Now I am focusing 100% on investing again.
Right. No, but I mean, it's like, I think I have to give you a lot of kudos. You do a lot of social media.
Yeah,
you get yourself, because I mean, and this is important. It may seem cheesy to you, but today, right, if you're not doing a lot of social media, if you're not in front of people, guess what? You're forgotten that quick.
Yeah,
it's
you
just that
are.
simple,
Yeah.
right? It's just that simple. So this is like really, really, really critical for anybody. And so he uses his corporate to become an agent. Then you're at the same time you started educating yourself about investing,
100%.
right? And at the time you couldn't do a flip or a rental, so you did a few wholesales.
Yeah, I did a
right?
few wholesales.
You're like, I'm going to make wholesale, and you make a lot of money on those, right? What, 7, 8, 10,000 bucks?
I've done 4 now.
Okay.
Right? It's a quick buck, but I'd rather just keep them if I
Right,
can.
absolutely.
Right? Unless it's an area that I for sure don't invest in.
But it's like sometimes if you want to be the king, you have to serve first before you become the king, right? I mean, it's a step-by-step process, but what is great is you didn't just jump in and go, oh my God, do or die. You kind of used one to leverage the next. The
I took
next
calculated
to leverage
risk.
which is
Calculated
exactly
risk.
what makes
because
sense.
like that was essentially when I quit my 9-to-5. That's the reason why I quit joined Mastery, right? Because I wanted to start flipping, but then when I realized like, oh shit, like my sales are down, like
Sure.
I'm like, I can't risk the capital I have to invest and not be selling houses at the same time. So I'm like, well, let me just take like a hiatus, a break from investing.
Right.
Let me focus on one thing. Let me get good at it.
Right.
Once I'm good at it, I'm gonna master it. Then
Right.
I'll focus into the other business.
Got it.
Because right now I treat both businesses differently.
Got
My
it.
realtor business is an S corp. Anything regarding real estate investing is an LLC. So now I treat it both like a business.
Okay. So now let me ask you this, right? As an agent, a lot of times, right? A lot of agents are good at resales, right? They're good at customer service, right? They may be good at follow-up, right? What is the skill set difference between being a great agent versus a really, really good investor?
Yeah. So I would say definitely like the difference between a great agent and a really, really good investor is being able to supply your own deals, right? I think like cold calling is the most robust way of bringing business, and that's how I built my business. Really, cold calling, expired and canceled listings.
You're calling
I
expired
cold call,
cancels?
yeah, Mike
Okay.
Ferry. Yeah, that's what
Okay.
I
Oh,
did the
okay. All
coaching
right.
for a
Yeah.
couple.
Yeah. No,
Yeah,
I mean, I love that method because
I know.
like literally for 12, 14 years, that's exactly what I did.
I mean, it's the most robust way to get business, and I feel like that's what really helps me stand out more because
Right.
sometimes I cold call, I meet a seller, and I see it's property that needs work. Well, I tell the client like, hey, you want this or you don't? Like, I mean,
Right.
it's off market, right?
Sure.
So I feel like that's what really distinguishes both, right? And obviously knowing to how to properly analyze a deal, right?
Right.
Whether if it's good for rental or flip. By now, like for me, in my personal experience, like I've done business in so many counties that I know what areas are good for flipping, what areas are good for renting. So
Got it. Okay. So a lot of times, right, agents will look at a property, they go, oh my God, we'll take a simple example, right? The property is, let's just say, resale value, ARV after fix up is $400,000. And they'll look at it and they go, oh my God, Andrew, I can buy it for 320, right? And what they don't realize is that there's no margin.
yeah, there's
Right,
no
there's
margin.
just no margin. If you truly want to flip the property for 400,000, you got to buy that property for somewhere around 200.
Yeah.
Right, you got to buy it maybe a little bit lower.
Yeah.
Right, and because that is never taught. Right, with all the licensing courses, you learn ethics, you learn this, you learn contracts, blah blah. But you're never taught how to truly understand how to figure out, okay, what am I going to pay for a property? How much rehab is needed?
Carrying
Right?
costs.
Carrying cost. Where am I going to get the money? Right? So your deals, are you doing them cash with your savings or with your earnings? Are you doing private money? Are you doing hard money? How are you doing that?
Right now I'm leveraging hard money,
Okay.
right? And well, I haven't gotten a PML yet, but I have a few PML lenders that I have a good relationship with, right?
So to the audience that doesn't know, what's a PML?
Private money lender is basically someone, long story short, like someone with a lot of money and they trust you, they analyze your deal and they fund you on 100% of the deal.
So for you, I mean, it could be your cousin, your aunt, your uncle. They have a couple $100,000 in their IRA or savings, and they're lending to you for a real estate deal. For you, did you have a lot of rich uncles and rich cousins
No.
that could just come up with money?
No one, unfortunately. Now that my relatives are seeing like what I'm doing and that I have had the success, now they trust me.
Now they're like, okay, yeah.
Yeah, now they
Right.
trust to dip into their 401k.
Sure.
Give me like 50, 60 grand.
Sure.
And, we do JV agreement. Even though it's family, right? I want them to have that assurance like, hey, your money is in good hands. So,
Right.
yeah, unfortunately, no. I don't come from money. Everything that I built to this day has been on my own. 100%.
So, in terms of basically private money, right? You can always go to Mastery,
Yeah.
right? To basically pick up private money. Was that a piece of Mastery, like initially? Like obviously it changes. Initially, what was the thing that attracted you? That hey, not only am I going to become a real estate agent, but I'm going to go join Mastery and be a part of it. What was that in the beginning?
Yeah, so definitely like the private money, right? 100%. And two was honestly to try to pick up clients from here. And again, for the wholesaling, like, offer it first within Mastery. So that was honestly like the purpose of me joining when I first joined. Yeah.
So basically, that's the reason why you joined.
Yeah.
Was because you saw access to private money. Did the numbers, the way we were talking about, did that make sense?
Oh, 100%. Yeah. Especially that. Sorry, I forgot to mention that the real estate education.
Right.
More than anything, right? Because I already knew, but I wanted to perfect my numbers. So I know that, hey, I need to buy this no more than this, and my numbers is going to be exactly that, right?
So it's like in general, right? You're Hispanic, you're doing well, you're a young guy, right? Sometimes people will look at you, and I'm asking a question, which you probably know. Oh my God, man, that guy, he thinks too much of himself, blah, blah. But as we grow, right? I mean, the first wholesale deal, you call me, you're like, man, I'm not sure, dude. I don't know what to do. Is it going to be okay? And I mean, again, talk me through that, because a lot of times people may look at you from outside, dude, he's got it together.
Yeah.
Do you really have it that together?
I would say I would say I do for the most part, but there's still like, I'm always a guy that I strive for perfection. I strive for excellence, right? I'm not complacent. I don't think I'll ever be like 100, like, oh shit, I'm good. Like, right.
Yeah.
I feel like once you're an entrepreneur and if you're striving to grow, regardless of what line of business you are in, right, you're always going to strive for perfection. But I've always tried my best as much as possible to be, 100% good with my business and everything and myself as well too. So,
But there are times when you're unsure. There are times
yeah,
when you're like, oh my God, I don't know.
yeah,
Right. And there are times where you're like, and that's what causes growth.
yeah,
Right. A lot of times people want to be in their comfort zone. Oh, I don't want to feel scared. I don't want to feel frustrated. I don't want to feel that I don't know. Right. And is that something? So you work with a lot of agents, right? What do you think is stopping them?
definitely like getting educated, like analyzing stuff, sitting down, like sit in front of your computer, um, make a simple spreadsheet, run some numbers, educate yourself, and take that calculated risk, right?
Right.
Yeah, I feel like if you don't analyze things, if you don't take the time to analyze things, and you expect someone to just like spoon feed you, that's just not gonna happen,
Right.
right? As an entrepreneur, that's your job, to figure stuff out, analyze it, take calculated risk, and just throw yourself at it. But you got to do all this back end work before you jump into it. Don't just do it blindly and stupidly, because if not, you're gonna fail.
Right.
Right. So 100% is the education, like to analyze things, and just um, losing the fear, right?
Losing
Losing
the
the
fear.
fear.
So you did a few wholesales, right? Now you're doing you're doing few flips, right? So talk me through kind of what is your strategy as how do you look at it as an agent? I need to do a certain amount of sales a month because that obviously puts food on the table,
Yeah.
right? That's what creates your lifestyle, and that's how you live. And then how do you say, okay, I'm gonna flip this property or I'm gonna do this as a rental? How are you doing that mental calculation in your mind?
So for right now, honestly, right now I'm focused 100% on flips,
Okay.
just on stacking more capital,
Sure.
and then if I can get at least 1 or 2 flips done by the end of this year, next year my goal is to acquire 10 doors per year and be flipping at the same time and selling. But I'm gonna kind of hold back a little bit on selling as much as I do right now, because we I am selling like over 1 million a month in sales,
Okay.
which is a lot. And my expenses is not too much, right? My overhead, I would say, like my business operating expenses is like 3 to 4 grand,
Right.
and my living expenses is like only like 3,000,
Right.
right? So I already know how much I got to make to pay off like my assistant,
Sure.
all my marketing, everything, and then my living expenses aside. So yeah, for sure, right now I'm just 100% focused on flips, and then I want to get back into rentals starting next year,
Got it.
starting with multifamily.
So basically, real estate agent income is your day-to-day income.
Yeah.
You know what that number is. You need to crack every month. Then on top of that, you're going to do flips, because both being a real estate agent as a flipper, that's what builds cash.
100%.
And then, and that's cash for you to live on, for a little bit of your savings, right? That's your little nest egg. But then you really build your wealth with the rental property, right? So
100%.
flips and being an agent builds cash,
Yeah.
and rentals build cash flow.
Basically, like my whole mindset was this: like, I feel like people gotta sit down and calculate what their living expenses are and what income they desire to
But man,
make.
that's scary.
It is.
That's scary to do.
It is.
Right? It's a scary thing to do that, hey, this is what it's like. It's better. I mean, I'm guilty of it, right? Where you want to close your eyes and put your head in the sand, and that's that.
Yeah,
So,
you have to, right? So like in my realtor business, I have a P&L.
Right.
I have a P&L. I do my own bookkeeping. I use this AI software to
Sure.
keep track of all my expenses. And I know when I spend too much, right?
Right.
Like I know if I'm profitable or not.
Right.
Like people need to sit down, calculate how much money you desire to make. I'm talking for real estate agents.
Sure.
Like, okay, if you're selling 5 million a year, that's roughly like what, like 100K, 90K in
Right.
gross commission, GCI.
Right.
So like, okay, up it up a little bit more,
Yeah.
like invest into an assistant or whatever to grow more. But however, and this, like I said, this is a message to all realtors: live below your goddamn means.
Right.
Live below your means, right? Because I believe it or not, a lot of real estate agents that I've seen, they don't have an S corp. They don't pay themselves a salary, so they just take their commission check and they eat it all up. Then tax season comes up, and like, oh shit,
Yeah.
Like, you know,
No, I mean, I have to admit I was guilty, right? Because in a lot of ways, I'm I'm very disciplined in some ways. In other ways, I'm not, right? And it just fact of life, guys, right? And I'm saying this because I have discipline in certain things, right? Which is that I do not take any rental money. I don't play with it. I will reinvest it back in the business to buy more properties, but I don't go play with it,
Yeah.
right? That's one thing I've always done since 2011 till this day, right? And so what happens is it grows and grows and grows, grows. But other parts of making sure of each commission, putting a little money aside, right? Making sure that you file taxes on time, all the things that are not talked about in our industry, right? But it's the biggest because it's quote unquote you're self-employed.
Yeah.
You can do whatever you want, and that has bad results over time, right?
It does. It does 100%. And that's why, like, I'm using the flips. I'm using what I know, the resources I have to acquire my own deals, my sales, to just stack up as much capital as possible and throw it back into rentals. That's really, it's very that simple, right? Because I don't want a big house. I don't want a fancy car right now.
Right.
In the future,
No, it'll come.
It's-
Sure,
it's-
it'll come. It's just a matter of it's like one of those things. Either you pay now and enjoy the rest of your life, or you basically work the rest of your life, right? I mean, you're gonna have to at some point economize for a little bit, put a little bit money away, let it build a little bit, have enough, and then you can spend at a much higher rate, and it doesn't affect your nest egg.
Yeah, 100%. Well, it's all comes down to being disciplined and sacrifice a little bit, right?
Right.
Like, could you drive a used Honda for
Sure.
a couple more years?
Sure.
100%, right?
Right.
Is it really worth getting like an expensive Mercedes Benz right now?
Sure.
I don't think so. I feel like you have to first build the foundation,
Right.
and then build the castle. Then, yeah, maybe you could, splurge money a little bit here and there. Enjoy yourself too, right? Because life is short. But
Sure.
I feel like when you're young, especially like as a young entrepreneur, I feel like being disciplined and just living below your means and increasing your income per month, I think that's the formula right there to be able to acquire real estate and get to the wealth part.
Got
of the
it. So
business.
talk to me about the house hack strategy.
Yeah.
Because that's a strategy a lot of people don't realize.
Yeah.
And it's probably one of the biggest hidden gems.
It is.
Right? Biggest. I mean, and obviously, if you're listening to this and you want Tony to help you, he'll be happy to, right? We'll
100%.
give you his
100%.
information, so he'll be happy to help you find a house hack. But what exactly is house hacking?
So house hacking is basically when you buy anywhere between 2 to 4 units, because that's considered residential. Not anything above 5 is commercial, so that you can't really house hack with that. You basically buy a property that you're going to live in it with a primary residence loan, like FHA, conventional, where you're not required to put that much money down.
Sure.
3 to 5%, right?
Sure.
So instead of buying a house, you buy a 2 to 4 unit. You live in one unit, or you rent the other out. Let's just say your mortgage is $3,000, you get $1,500 in rental income. Boom, like that already cuts your mortgage by half.
Okay.
Right. So it's very easy to buy these properties because like FHA, conventional, they'll easily finance you to buy these properties. I just bought one last week. It was a 2-unit in Summit. But I did bank statement loan though, because I'm self-employed, right?
Sure.
It's still though only 10% down,
Sure.
which is not much.
Right. Hold on. So let's slow down. Let's explain this. This is an important point. Okay. So 2 or 3K loan, right? Or a house hack type of a thing. You can buy a property. How much do you need down?
Just 3.5%.
3.5%.
Just 3.5%.
Then you have a little bit of closing costs.
Yeah.
How would I cover that?
So closing costs, like I always calculate like 3% of the purchase price, and we can always negotiate it. We can either ask for seller credit, right? Maybe offer 5, 10K more. Ask it for it back as a credit, because at the end of the day, you're gonna live in it, right? You're not gonna flip in it, so your profit margins aren't that big,
Sure.
right? Or they're not that small, right? So you ask for credits, and then what you get in tax prorations. I mean, you can pay hardly any money down.
So you could literally buy a property 3.5% down, right? And the closing costs. So you can basically get a seller credit of almost 6%.
Yeah,
Right.
6%.
So just to make things simple, let's say you're buying a $200,000 property. That means you need 3.5%, which is $7,000 plus another 5 or 6, right? On top of that closing costs, you could get that almost entire amount from the seller. Adjust that in the price, and you could literally buy that property for a couple thousand.
Yeah.
Right? Couple $1,000s, you can buy a property. Here's the kicker of it: you live in one unit, and then you rent out the next one,
Yeah.
right? You rent, or if it's a 2-unit, 3-unit, 4-unit, and it's like a Summit. I would say is a basic B area,
it's a B
right?
area.
A nice solid B area, Hispanic area, right? And a lot of times people will they're like, well, why would I want to live in Summit, man? Why am I going to live in 2-unit? Because there may be a neighbor next door, my tenant, or upstairs. This goes back to sacrifice.
Yeah, it comes down to the broke mindset. Like you got to sacrifice, and if there's one thing that that I've known, realize is to sacrifice. Just sacrifice. Just struggle a little bit.
Sure.
Like it's not like forever, right?
Right.
Obviously, everyone's situation is a little bit different, right? Living situation, whatever. But I feel like if you go buy a big house and you live in it, I feel like that you're going to kind of struggle to want to do more stuff with your money later on after that.
Got it.
So it doesn't take that much to buy your
No, I mean,
real
it's
estate.
like the strategy should be like literally where you go buy the property, live in it a year or two, move out, go buy the second one, right? And keep the first one. Don't sell that one,
Yeah,
right?
keep it,
Because
keep it.
now the property will cash flow. You're making, I mean, virtually the idea should be is that let's just say I'm buying a $200,000 or $300,000 property and my payment on the property is $2,500, $2,600. Guys, listen, if your tenant covers $1,500 for you, $1,600 for you, you get to live in the property for $900.
Yeah.
Right? They're subsidizing your cost of living.
Yeah.
Once you rent it, now you got $500, $600, $700 cash flow, and just go do it again.
Yeah.
Like literally, by the time your kid becomes 3, 4 years old, like generally people's kids are going to be when they're kind of in their 30s,
Yeah.
right? You can be in your own home, right? Your own single family home, and the other 2-unit, 3-unit properties that you have, 3 or 4 of those, or 2 of those, will almost cover your mortgage.
Yeah.
Right?
100%.
And literally, your tenants will run on their treadmill to pay your bills.
100%.
Right?
100%. I want to elaborate on the one that I just bought, right? So I did. So if you're a realtor and you're looking at this podcast, you don't have to worry about going to get an FHA loan, whatever, because there's like bank statement loans.
Sure.
And they're as little as 10% down.
So explain, what is a bank statement loan for self-employed people?
Yeah,
What does that mean?
if you're self-employed and you run your own business and you make a lot of money, let's just say you make $15K a month, typically you should be putting at least 35% aside for taxes. However, though, a bank statement loan allows you to get a primary residence loan, and they don't look at your tax returns at all. They just look to see how much money goes into your business bank account, and they take an average of 12 to 24 months, ideally 24 months, because you can get better rates, right? So I'm 2 years, self-employed now.
Sure.
I've had 24 months of bank statements, and I only did 10% down of a $400,000 property that appraised for $435.
Right.
So I got like 30 grand in equity
Sure.
right off the bat.
Right.
10% down, obviously it's like 40 grand.
Sure.
Plus closing costs because they're a little bit more.
Sure.
Roughly closing costs were around 25K. So 65K all in, right?
Right.
But if you're a real estate agent and you know how numbers work, I used my commission
Right.
to reduce my closing costs, tax prorations, and I got 10K in credits from the
credits.
seller.
Yeah.
So I ended up paying 30 grand for a 400
At the closing.
At closing.
At closing.
For a $400,000
see, guys,
property.
That's not just, that is a great agent.
That is a great agent.
Where you're good when you're helping everybody else. You're great when you can help your own family. Right? That
100%.
takes it to the next level.
And so my monthly mortgage is $3,500. Yeah, it's high because I got a little bit higher interest rate because it's a bank statement loan.
Sure.
It's non-QM, right? So when I refinance, it should bring down my mortgage down like $600 to $700, and I'm already getting $1,600 a month in rental income because I already had a good tenant in the property. So when I refinance, I'm going to be paying like $1,300 to live in this property.
Right. So
That's
basically, right now it's a little bit high, but once you're able to refinance, right? But now you have a big property that for just if you were buying yourself, you could probably swing it, but now you're stretching.
Yeah.
Right? Why put yourself in that position? Here, you have another tenant in the property that's helping you offset and building wealth for you.
100%.
Right? That makes 100% sense. So where do you see yourself, like in terms of flips this year, in terms of rentals this year, or into the next year? Over the next 2 years, what's the goal for you?
So for the end of this year is on the realtor side of things, I want to help 50 families. So far, we're at 30, right? So we're on pace. I want to get at least two flips up on the market by the end of this year, and starting next year, I'm gonna kick it all in gear for at least 5 years of acquiring 10 doors and doing at least 2 flips per year.
Okay.
So
Got it.
that's my goal right now, starting next year for at least 5 years, just doing as many flips and selling as many houses and acquiring at least 10 doors per year.
As there's nothing better than seeing fellow agents, right? Because I've been there, start investing and start building for their financial future. You can be a great agent, take pride in how hard you work, but equally take pride in how much you're investing for yourself. And not just money, how you buy properties at deep, deep, deep discounts. Do you feel that as a part of investing, you've learned that now?
Yeah, 100%. 100%. So like now, whenever I get like off market leads that are interested in selling, my mindset when I come to meet the seller is not as a real estate agent, it's as an investor.
Right.
Right. Let's say if we can't come to terms, okay, well I'll list it, whatever.
Yeah.
But the mindset should always be when you go on a listing appointment, is as an investor,
Sure.
as a buyer.
As a buyer first,
Yeah,
right?
first.
Because you can't wear both hats. You got to
You
wear
can't
one.
wear- yeah,
right?
100%.
You got to follow the ethics rules. But if you're investing, and a lot of times people think, oh my God, I'm an agent, I can't invest. No, disclose, right? That's the biggest issue is you got to disclose. You can't say, oh, I'm going to look out for your best interest. And then, oh, by the way, I'm the buyer. Can't do that, right? You got to understand, real estate industry is built for you to win. And you have a lottery ticket in your hands. The question is, are you willing to cash it in?
100%.
Right? So any last words, Tony, as we wrap up?
Definitely like if you're an entrepreneur and if you're struggling, definitely like keep through it, keep pushing through it, and definitely have a goal, right? Have a goal that okay, you want to start your business or you already started your business, you're struggling, build it up, build income, keep living below your means, use the rest of your income from your business or whatever it is you have and invest it into real estate. That's the best thing you can do. Because real estate only gets more expensive.
Yeah.
Right?
No,
if you wait to
100%.
buy real estate, it's going to be more expensive then. So.
Great. So one last question as we wrap up. As a real estate agent, right now the market is changing. It's kind of adjusting, right? You seem to be kicking ass, right? So what is your opinion both as an investor and as a real estate agent? Because a lot of people are like, oh my God, you know the market, blah, blah, blah. Do you let the market dictate you?
No, I adjust to the market, right? It's like a great boxer, right? When a boxer can prepare for a fight and if once they're toe to toe with their opponent and if they decide to fight with a different style, like you got to adjust, right? So I just adjust everything, right? However the market is, right? If obviously right now it's very seller heavy, right? So I focus on getting listings, right? It's slowly becoming a buyer's market, but we're also focusing on buyers as well too. And as an investor, really just focusing on certain areas where I know where the market time is way less, right? So either for a flip or for whatever, if for a rental, whatever the case it is. It's just adjusting to what the market dictates.
Got it. That makes perfect sense. So guys, this has been a great episode with Tony Garcia, and hopefully you were inspired. If you're a real estate agent or if you want to be, and you're not investing, use your real estate license because that is a golden ticket. The question is, what are you going to do with it? You're listening to Andrew Holmes with Cashflow for Life, and we will talk to you soon. Please make sure you share, like. That's how we get to grow. Tony, thank you again.
Thank you. Thank you, Andrew.